Ladies and gentlemen, good day and welcome to the Prudent Corporate Advisory Services Limited 3Q FY'25 Results Update Conference Call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shubham Prajapati from ICICI Securities. Thank you, and over to you, sir.
Yeah. Hi. Good morning, everyone, and welcome to the Q3 FY'25 results Concall of Prudent Corporate Advisory. We have with us management of Prudent Corporate Advisory Services Limited, represented by Mr. Sanjay Shah, Chairman and Managing Director, Mr. Shirish Patel, CEO and Whole-Time Director, Mr. Chirag Shah, Non-Executive Director, and Mr. Chirag Kothari, CFO. Now, we would request the management to start with the opening comments, post which we can open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Shubham. Thank you, and good morning to everybody. I welcome you all to the earnings call. I thank you all for sparing your valuable time to join us today. I hope you have the investor presentation handy with you because during the discussions, I will be referring a lot of slides which have been given in the investor presentation. So before I start discussing the current quarter's number, please turn to slide 20, where we have showcased a compelling story of how mutual fund distributors can exponentially scale their business by aligning with a platform like Prudent. Top 2 bar illustrates how Prudent's AUM has outpaced industry's regular AUM growth over last decade. While the industry has grown at a steady 18% CAGR, Prudent has achieved a remarkable 36% CAGR, growing at twice the pace of industry. What is even more striking are the two charts at the bottom. Here we compare the growth of our top 1,000 MFDs with those of industry's top 1,000 distributors. To ensure a fair comparison, we have excluded banks from the industry data. The results are extraordinary. The industry's top 1,000 distributors have grown their AUM at a CAGR of 18.6%, multiplying their AUM by 5.5 times in last decade. However, in comparison, our top 1,000 distributors have achieved an impressive 41.1% CAGR, multiplying their AUM by a staggering 31 times. This data clearly demonstrates unparalleled growth potential of partnering with a platform like Prudent. It's evident that such an alignment is not just beneficial, even it is essential for the mutual fund distributors who aspire to scale their business exponentially. Now please turn to slide 21. This slide highlights how leveraging technology within our platform has accelerated the growth for our top distributors. The slide segments our top 1,000 distributors into the group of 200 each, meaning first 200, then 201 to 400, 401 to 600 likewise, based on their AUM. The first chart on the left-hand side shows the percentage of AUM on our technology platform FundBazaar by these subgroups. So from top 200 distributors, you will see that a significant 72% of AUM they have on our FundBazaar, while the 800 to 1,000 distributors group, this figure is only about 52%. The correlation is clear when we examine the 10-year growth rates. Top 200 distributors who use FundBazaar extensively has achieved a 45% CAGR in last 10 years. In contrast, 801 to 1,000 distributors group has grown at a slower pace of 30%. Technology adoptions directly impact the number of clients a distributor can handle. The top 200 distributors manages an average of 730 clients vis-a-vis a category of 800 to 1,000 who manages 164 clients. So this slide number 20 and 21 collectively emphasizes a powerful message. Partnering with a platform and adoption of technology are two critical drivers for the exponential growth for the mutual fund distributors. So we thought we'll just try and tell you what are the growth drivers of people aligning their interests with the Prudent. So now please move to our slide number 43. Coming to the Prudent numbers, I would like you to go to the slide 43. The chart on the left-hand side of the slide states our AUM on a closing AUM basis as of December end, and we are 7.4% higher compared to 9-month average AUM. However, I just wanted to tell you that in the current month, due to significant corrections, as of yesterday, our AUM is down by almost about 6.1% due to mark-to-market. So from 1.06 lakh crore, we are now close to 1 lakh crore. However, I want to categorically call out that the retail sentiment is very much intact. Our net sales in first 9 months is 50% higher than what we did in last full fiscal of 2024. The redemption ratio at 44% during the last quarter is much lower than the 30 quarters historic average of 60%. The gross new active investors added in first 9 months of our fiscal is already equal to the number of active investors we have added in last entire financial year of 2024. Our monthly run rate of adding 20 crore SIPs is still continuing, and we are continuing to add the same number in the current month also. So if you look at the chart on the right hand side, quarterly average AUM is up by 3.4% sequentially and 44.6% on a YOY basis. Now come to slide 44. We have shared the details of what moved our equity AUM on a YOY basis and quarter on quarter basis. As seen in the left hand chart, closing equity AUM has moved higher by 38% YOY to around 1.02 lakh crore, with 40% of the movement being contributed by net sales and the balance by mark-to-market gains. Net equity sales, as stated during the last 4 quarters, has been really strong at 11,654 crore. If you see the right-hand chart, which shows the movement in equity on a sequential basis, equity AUM has declined by 1.2%, mainly due to negative mark-to-market of 4.7% in last quarter. However, our M2M losses were lower than the Nifty 500 downfall of 7.7% in last quarter. Now please move to slide 45. Where in our bottom left, we have given the data on monthly SIP flows and our market share in SIPs. During the month end, our monthly SIP book has touched 935 crore. We have added 280 crore to our SIP book in last 12 months, and we are confident to touch the mark of 1,000 crore by March 2025. In the month of September, we collected 143 crore through systematic transfer plan. This number is reported by us on the actual realized basis. The STP value of 143 crore is not included in the SIP number which I have talked about. Now let me turn to the current financials. So please move to slide 48, which is the last slide of our presentation, which talks about the standalone number. Now let us look at the revenue front. On the revenue front, you would have seen a sequential decline in other financial and non-financial product to the tune of 21%. This is mainly triggered by fall in the AUM of P2P product, which we are distributing called Liquilon. With the implementation of new regulations by RBI around August last year, there is no fresh inflow in this segment. And with no fresh inflow, existing AUM is going to run down due to constant maturity. In FY'24, we earn a gross revenue of 13 crore from P2P distribution, and in first 9 months of the current fiscal, our revenue stands at 6.6 crore. If you look at the bifurcation of first 9 months, the last quarter alone, which is the quarter period previous to this quarter, that means September quarter alone, we earned 2.56 crore, and the December quarter we earned 43 lakhs only. So there was a significant drop of 2.1 crore in the P2P segment in this quarter alone. However, on the other side, there is a strong growth in the PMS, AIF as well as fixed deposit vertical. Our average PMS AIF in first 9 months of the current fiscal has doubled to 1,060 crore from full year average of 605 crore of last year. Our closing AUM in the PMS AIF segment as on 31st December was 1,270 crore. So this reflects a significant growth from previous year in the PMS and AIF, and we believe PMS and AIF is a pure trail driven product which is very aligned with the mutual fund business for us. Now coming to another line item, which is the stock broking. So on the stock broking too, sequentially revenue have fallen by a third. Large part of this fall is attributed to a fall in transactional revenue owing to a heightened volatility and fall in the market. Also, there are some teething issues which we have faced in the last quarter due to the merger of Prudent Broking with the Prudent Corporate, which also led to a incremental revenue fall in the particular segment. However, particularly in the broking segment, let me tell you that in the current quarter, very soon we are going to live with margin trading facility. A large part of our broking revenue comes from cash segment, and we believe this will be a good value-added product for our broking clients. Now trying to address another revenue item, which is our treasury income classified as the other income. And if you look at there on a standalone number, our other revenue has also fallen by 26% from 5.8 crore to 4.3 crore. It's mainly because of mark-to-market losses on our small portion of money which we have invested into equity. So I'll just tell you that we have roughly about 15-16 lakh rupees of SIP going on per month, and we have hardly about 10-12 crore of exposure into the equity book. I think uska mark to market losses last quarter ke andar aaya hai. So that is also, I think, one of the reasons for fall in the. So I think there are a lot of things which have impacted the revenue item, and that's the reason you will see that the revenue has came under pressure in spite of there being a almost 3.4% growth in the average AUM, and mutual fund revenue has grown in the same line. Now another major change you will see is in the commission and the fee expense item. Sequentially, the payout ratio has increased from 63.4% to 64.6%. So let me just try and address this also. So by end of second quarter, that is the end of September quarter, we rolled out a scheme of additional trail for our partners based on the net sales did by them in the current financial year. So the partial cost of that based on certain projections was provided by in for 6 months. However, when we are preparing the result for the December number, we reassess the possible costs because of the additional trail. And as I already told you that there is a significant higher net sales which is done by us or our distributors in the current quarter. And so I think we realize that there is a need to make higher provision for the same due to strong net sales and which we are witnessing. Hence, we need to provide additional 6 crore towards this, and out of these 6 crore, we have done an extra provisioning of 3 crore in this quarter, and balance we will be providing based on the actual number in the March quarter. So this was on the payout front. So despite the challenges, our standalone revenue and profit in the quarter grew by 42% and 43% respectively on a YY basis. Now, let me take you to the consolidated number slides. So move to slide number 57. On the insurance front also, I think the insurance revenue degrew by 15.6% sequentially to 28.6 crore, which has led by a fall in the life insurance face premium. So if you look at industry as a whole also, if you look at the data for individual new business premium for LI, the industry also degrew by about 10%. On account of changes in the surrender value which has been implemented by the regulator from 1st of October, the rate structure was not clear, and because of no clarity which has emerged from the manufacturer in the first month, I think the October month was significantly impacted. So that has led to a face premium at a very low level in the month of October and mid of November. So however, business is much better in January when I am talking about to you the December, compared to December, we are expecting the business is likely to be reasonably okay in this quarter. So now finally looking at the consolidated profit for the entire quarter, which grew by 35% YOY to 48.2 crore. Additionally, our treasury book has reached 330 crore, which is also giving us a war chest to grow inorganically. So to summarize the result, slower growth in revenue is mainly because of non-mutual fund product like P2P, broking, insurance, and the treasury book. The dip in margin was mainly led by the management call to announce additional trail based on the net sales to our distributors. Despite challenges during the quarter, our profit grew by 43% YOY. Our growth is driven by flow through retail investors, which is predominantly coming through SIP, which with an average ticket size of 2,900 rupees. This reflects the strength and the resilience of our retail base. The SIP are ingrained as a disciplined habit rather than a discretionary investment. So this solid foundation reinforces our belief in the structural shift towards mutual fund and positions us for the sustainable growth. So I think with this, I will rest and I'll keep the floor open for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. first question comes from the line of Swarnabh Mukherjee with B&K Securities. Please go ahead.
Hi, sir. Good morning, and thank you for the opportunity. Sir, first question is on the flow part of the business. So just wanted to understand that, till the December the number looks fairly strong, but, and you have given some qualitative idea also in your opening remark. But if you could give some clarity in terms of quantitatively, like, the 935 crore SIP flow number that was there in monthly in December, what it would be broadly in case of January, because we are almost closing January now. And in terms of net sales, how is it panning out again in January? And given the market impact that is there in the market, how much degrowth broadly we should expect in this particular month in terms of our overall AUM? So that is the first question. Incrementally, sir, in terms of the MFD activation and getting new business, I just wanted to know from you what is the situation right now, because the kind of correction that is there in the market would have occurred after a good amount of time. So I wanted to understand how you are seeing in terms of MFD activation in that space. And again, in terms of the distribution of financial products, we are also seeing a lot of players like fintechs and entities who were in broking earlier now starting to focus on this line of business, both through a digital medium as well as, I think, through an intermediated medium. So wanted to understand how you are gauging the scenario. Would the competitive intensity go up further in this space? How you are seeing that? So that is on the mutual fund business. On the life insurance business, I just wanted to understand that the blended commission rate has come off this quarter, I guess because of the surrender value change in the commission structure. So has it kind of stabilized, or should we see any further compression going forward also? Your view on that? Yeah, so these will be my questions.
I think series to address, because about the SIP net flows, and series about the MFD addition, the new business. Yes, series.
So yeah, because of the market correction, I think last 7-8 days we have seen that some drop in the new business. But we are confident that we should be able to achieve the new SIP numbers, which would be higher than my November and December number. So January till date also, whatever we have done and what remaining days we are anticipating, probably January business would be higher than what we did in the month of November, December. Similar would be the case in case of fresh sales as well. So fresh sales also last though 4-5 days, I think I would say that volumes have dropped significantly. But January month still we are hopeful that we should do better fresh sales compared to what we did in the month of November and December. Coming to the net sales side, I think we are very, very confident, and net sales also would be higher than what we did in November. Obviously, we were anticipating January to be a very great month compared to what we used to do in last 1-2 quarters. But because of the correction, we could not deliver the extraordinary number in the month of January, but surely we will be able to do much higher than what we did in the month of November, December. So that we are very, very confident on. Second point was the MFD activation. So yes, new business has come down. The volume has come down in last 5, 7, 10 days, but MFD activation in current month also is the same like what we used to do in the previous months. There is no drop in the number of MFD participating in this particular month. MFD acquisition, new MFD acquisition is rather little higher than what we did in last 2-3 months. So that parameter also we are on track, so we are not much worried about it. Another point, the blended yield because of the surrender value. Blended yield has come down mainly because of 2 reasons. One definitely is the surrender value changes post-October, and second is some business mix. Mainly because in this quarter, our new business in life insurance has dropped, so that has attributed some drop. And secondly, product mix also has changed. So earlier we never used to do the ULIP product. Now at least 57% of our business is contributed in the ULIP product, and that also has brought down a little bit of the blended. Hopeful that I think the blended yield should stabilize to the current level. I don't think that it should change mainly, but yes, I think should stabilize at the current level. The other point was the other product which the new competition, fintechs and all these companies have started selling. Mainly we talk about 5 products apart from mutual funds, one-on-one. One is the P2P. Obviously, because our growth in the P2P was very, very high, but mainly because of this rule change or the RBI new guidelines, we stopped selling the P2P products from August onwards, and hence there is a drop. So obviously, I think we are not hoping that the P2P revenue will come back, so that could be the major loss in the near future unless we replace it by some other product. Coming to the PMS side, PMS and AIF side, we have grown that pie, so that is helping us to compensate some loss from the P2P business. FD is a new vertical, new business. Historically, the revenue was not great in the fixed deposit business, but incrementally we are doing a better volume in the fixed deposit business, so that is a positive thing. Stockbroking, earlier also we used to contribute around 3 to 4% of our revenue. We don't see a major movement on the stockbroking business side. And insurance, we are very, very hopeful that the numbers should come back. And one positive thing which we would like to highlight now, till date we used to do the broking in the subsidiary called Genex Insurance as a broker. We also have started doing insurance business in the name of Prudent with the corporate agency, and recently we have launched insurance business on our same portal, Funds Bazaar, where we distribute mutual funds. So that could be a positive trigger. So we are hoping that the insurance also should become stronger over a period of time. I think I addressed all your questions.
Yeah, understood, sir. I just had some follow-up on this. So, in terms of the product distribution by competitors also, I just wanted to ask that, I mean, many, I think couple of large companies have also announced getting into mutual fund distribution as well. So, is that a risk to our model in any way? I just wanted to understand that. And secondly, in terms of the chart that you have shared, that is very insightful, but I wanted to understand that among the 1,000 distributors in the industry, top 1,000 distributors in the industry, how many of our distributors would broadly figure out there, and what would be their growth rate vis-a-vis the remaining in the top?
So first part, I think let me answer. Second part, Sanjay Bhai will come in. What I understood, I think you are trying to ask that there are a few other platforms who entered in the B2B mutual fund distribution business. Is my understanding right?
So even B2C also, there are many intent which has been shown.
Mainly, if you look at when you are talking about B2C, historically all of them or majority of them are mainly on the direct plan side. Obviously, if you are seeing the number, definitely the direct plan is growing faster than the regular plan, but within regular plan, I think we are very, very confident that we should be able to maintain our market share, or rather we should be able to increase the market share on regular side. Direct plans may grow faster than the regular, but that does not mean that the regular plans or the regular distributors might not grow. That is our view, which we are holding for last many years, and still we are holding on that particular view. Second part, I think let Sanjay Bhai come in and answer. Sanjay Bhai, are you there?
Yes or no? So I think Sri has answered your question.
The first one,
if you can highlight on the top 1,000 distributor part.
Yeah. So the top 1,000, what we did is we took the current list of top distributors. We strike off all the banks, and those who are occupying the top league or the top table today, they should be in the business before 10 years. And those are the lists we have compiled, so which includes NJ and Prudent also, right? Because all the banks has been removed and everybody is a part of that table. But I think none of my distributor would be a part of that, because anybody who is working with me, that ARN would not be there in the industry, because that ARN would not be forming part of at least top 1,000.
Okay. So the top 1,000 is not necessarily individual, but includes NDs also.
Yes. Because there was a very difficult, because ND, RD and other is a very difficult thing for you to classify, right? Because then it was, and we got this number audited by a chartered accountant, so it was very difficult for you to classify because it's always based on your own perception. So we just removed the bank and all non-bank top 1,000 player has been taken.
Okay, sir. Understood. Very helpful. Thank you so much, sir, and all the best.
Thank you. The next question comes from the line of Dhawal from DSP Asset Managers. Please go ahead.
Hi, Sanjay bhai. Congrats on good quarter. Just had a couple of questions. First was relating to where we are in terms of AUM and where we closed in December. So assuming the 27th Jan number holds for the rest of the quarter, so from an earnings perspective, it should be like a 5% kind of decline from where we were last quarter. Is that how one should think about it? Or like just trying to understand mark to market has how much impact from where we are?
No. So if you look at, I think you look at the average AUM to closing AUM chart which we have provided. So last 9 months average AUM and last quarter average AUM is roughly about close to 1 lakh crore. And today we are at 1 lakh crore. So actually, if you look at from 1,06,000 crore to 1 lakh, I think average would be in the range of 1,02,000 crore. तो मोटा मोटी एक क्वार्टर में पेन नहीं आना चाहिए अगर हम ये इससे 1-2% आजू बाजू अगर बंद होंगे तो. But if you fall from here, then you have to keep in mind that there is a strong, what Series also said, I am also telling you, there is strong sales. Still, I think the retail is not hugely impacted. So if you assume that my 950 crore, 1,000 crore kind of a SIP, which I have been getting, if that money stays in, then which is almost about 1%, right? So अगर आने वाले टाइम में अगर आपको बहुत ज़्यादा correction नहीं दिखता है, then I should be reasonably with a couple of percentage variation. So frankly, Dhawal, you need to do a projection of what is going to be the impact of mark to market. अगर ये यहाँ पर रहता है तो बहुत ज़्यादा impact नहीं दिख रहा है.
Understood. Sanjay, what I was referring to was the third quarter number, but I understand your point that 9-month average is by and large almost similar, so should not be too much different. So that point I can understand. The other bit which I wanted to clarify was on the non-MF side, directionally, what is the kind of growth that one should expect in next couple of years from a net revenue perspective? What kind of growth you are budgeting in for the non-MF revenues?
So non-FF significant revenue comes from, I think now, are you finished?
Yeah. Non-MF insurance is our big pie. Insurance, mainly it is life insurance and health insurance. Life insurance main revenue comes from the fresh business. Health insurance main revenue comes from fresh as well as the renewal business. If you look at our health insurance growth as a book side also, we are growing far back. Our entire focus mainly to grow the total book of the health insurance, and we are very, very hopeful and confident. Business is growing and surely is going to grow faster, mainly after Prudent launching the insurance business on the Funds Bazaar. So till now also the 9-month number in the health insurance business is.
Seriously lost you. Hello.
Yeah, Sanjay, I will come in. So what you wanted to say was that till 9th month, health insurance business is in much better. In fact, we also crossed the last whole year fresh business of health insurance.
Yeah.
And another part was life. In case of life insurance, there may be some kind of slowdown, but overall health insurance will compensate for the same.
So there are three parts. One is the major revenue comes from the insurance, and probably what Shirish and Chirag is trying to say that overall we feel that it should do reasonably better. We don't see a lot of pressure on that particular part. Once the thing gets stabilized on the revenue part. On the broking and the PMS AIF, so if you look at the non-mutual fund, non-insurance, we do a distribution of all the financial products, उसमें से आपका P2P निकल गया now. And P2P has to a large extent in last quarter has been already replaced by the PMS AIS because the book has almost doubled. From 600 crore of book which we had in the last full year, this year now that book is about 1,060 crore. And with a closing aim of 1,200 crore. So we believe that 1,200 crore ka additional revenue will definitely compensate the fall of P2P next year, or rather it will give you more better revenue. I think the FD business which we started in last 6-9 months, that also should better over a period of time. And broking, which was the transitory phase, now broking is also with the MTM and everything, I think should do, because they're very small base. I think अगर insurance को छोड़ के बाकी के सारी product बहुत ही small base के ऊपर है, and they should do definitely much better. But we do not have the projection कि कितना टका से grow होंगे.
Understood. So, Sanjay, just to complete this point, so if you look at 9-month net revenue growth of the non-MF side, that is about 25%, roughly 124 crore versus 99 crore. So that growth trajectory by and large should continue, is what I was trying to get through. That you're very confident net with these new changes that we've made. Okay.
Yeah.
Okay. Got it. And just last bit is on the OpEx side. Any thoughts in terms of what kind of OpEx growth one should assume for next couple of years? Like what kind of growth? Assuming AUM again, I mean, just trying to think on its own, how much should be the OpEx growth? I feel it.
So I think the OpEx also, if you look at the last year, we added almost about 20-25 branches, and in the current year again there is an incremental cost which is visible on the OpEx side mainly because of rent, electricity, conveyance, because these are all related to branch expansion. I don't think today we are at 135. I think Sirish will definitely come and say, but I don't see significant rise from here onwards. So you can look at the inflation plus kind of about 8-10-12% kind of growth on the OpEx side without assuming significant addition on the the branches. On the manpower front, I think the salary growth will still continue to be a little bit elevated than the normal because of the competition which is emerging. So I think salary growth thoda sa rahega. But overall, I think it will be overall OpEx should be within the range of 12-13%, 12-14%.
Understood. Perfect. Those are the questions. Thank you, Sanjay, and all the best.
Yeah. Thank you.
Thank you. The next question comes from the line of Prayesh Jain with Motilal Oswal. Please go ahead.
Yeah, good morning, Sanjay bhai. Sir, just a few questions. Firstly, your SIP market share has been falling. 3.7, 3.6, 3.5 now. So, is it because of the competition that is emerging from the discount brokers or the direct route, and how do you see this trajectory going ahead? Second question is on the new arrangement that you have done with NFD of giving a higher trail. Now on the other side, you have your AMC who are kind of linking their commissions to the TER, and in a growing AUM time, probably we'll see a decline in TER, and that would lead to decline in commission. So in that period, we are increasing the sharing. So is it because does the competitor structurally does this business change towards a much higher sharing now, and we should assume that this sharing ratio that we've reached in this quarter or probably slightly lesser than the current quarter because some of the effect would have come in on the previous quarter in this in 3Q. So do you think that structurally we should assume a higher sharing going ahead for the next couple of years?
Sirish?
Yeah. So coming to your first point that SIP share has reduced by around 1 basis point or something. Here, obviously, I think the market share of all these fintechs in the direct plan is growing. I think that today, if you look at the direct plan contributes significantly in the SIP growth. So more and more SIPs are coming through the fintech and directly to the AMCs. So when you look at the total industry, also, direct will grow faster than the regular. So obviously, I think when you look at the total market share on the industry, we might be similar or little lower. But when you isolate into the only regular, we are gaining the market share. In terms of regular, I think definitely the growth rate is much higher than the industry's regular growth. So there, I think we are very, very confident on. Your second point is that when AMCs are talking about pressure on the margins and why Prudent has increased the cost by offering the higher additional trail. Obviously, I think we believe that this is the time when the sentiment was really good. I think if you exclude last 1 to 3 months, If you see that, we believe that I think this is the time to paddle up to the growth on the business. So obviously, and that actually has helped us. If you look at our net sales to gross sales ratio has improved. Obviously, the more and more contribution is also coming in last few quarters. If you add in the total costing, the new business, what we have done in the last quarter also will increase some kind of costing. But important and the most important point, I would say that more and more, as you know, that our commission structures are the tiered structures. So as the distributor becomes bigger and bigger and bigger, obviously they get a little higher share. In terms of AUM share, now I think more and more people have migrated from the smallest to the little higher structure. So that also has contributed a very, very little thing on the higher sharing. But I don't see that incrementally it is going to be very, very costly affair or it will impact the margin in a big way. Obviously, percentage margins will be able to maintain. Absolute margin might come down because as the size of the scheme grows, the receivable comes down, we'll not be able to maintain the absolute margin, but obviously I think the percentage margins we should be able to maintain. So we are not seeing any big problem in that.
So the current level is sustained, right?
Pardon? Hello?
The sharing with the distributors, the ratio, is the current level is sustainable?
Yes, it is sustainable at least for the near future.
Okay, got it. And just the clarification, if you mentioned you have 1,200 crore of AUM in AIFs and TMS together, right?
Right.
And what kind of revenues would you have earned out of that product in the quarter?
So it's about 404.31 crore in the current quarter. So if you analyze that, it's roughly about 16 crore. Based on the current quarter, I think the yield would be in the range of 1.3, 1.4.
Got that. And the sharing is similar as mutual funds or other products?
No, it's much better than the mutual fund. The mutual fund blended yield which we report is 91 basis points. Here I am talking about 1.3 basis points because here you get the GST over and above your regular yield, while in case of mutual fund, whatever you receive, GST has to be paid out of pocket.
Okay.
So same absolute margin is higher.
Absolute margin is higher. Okay, got that. Thank you so much, sir, and all the best.
Thank you. The next question comes from Lalit Dev with Equirus Securities. Please go ahead.
Yeah, hi, sir. So just two questions. So firstly on this commission.
Use your hand,
Sir,
please.
lot of loss of disturbance here.
Yes, sir.
Yeah. So is this better, sir?
No, sir. Can you please use your handset? Your audio is still muffled, sir.
Yeah. Is this better?
Yes, please go ahead.
Yeah. So just two questions actually. One, so right now we are hearing that a lot of AMCs have been rationalizing their distributor commissions. So just wanted to get a sense like how should we see our commission yields, gross yields for the next couple of years going ahead, and what would be the impact of the same on the top line as well as the bottom line. And secondly, like when we look at the insurance business, so just wanted to know like how is this business trading is doing in the month of January? Like are we back to the normal volumes in the life insurance, or like is it still lower than what we have envisaged?
Suresh?
Oh, yes, I think few AMCs have cut the commission in last few quarters. We believe that the bigger ones already have started or they already cut. This is mainly because if you see the AUM growth in last 2-3 years, and that has impacted AMC's margin severely, and hence they have cut the commission. Whether this kind of cut will continue or will go to all the AMCs, I think the opinion might be little different compared to what you might be thinking. Yes, I think few AMCs might come in to cut historical assets. Obviously, when the historical assets on certain schemes is reduced, it might impact the gross yield, gross revenue at the aggregate level, but the impact might not be that great because last few years, as and when the size has become bigger and bigger, the AMCs have already reduced the commissions on the new business. That depends on how many AMCs do come in to cut the commission and which all schemes they cut the commission. So today, if you see, I think hardly 4-5 AMCs have cut the commission on the historical assets, and that too not on all schemes. So only time would say that I think which all AMCs and which all schemes they cut the commission. But till now, whatever they have cut is already absorbed in the system, and you can see that I think we could be able to maintain the margins on the gross side. Coming to the net side, net yield side also, because we believe that as and when the AMCs cut the commission for us, simultaneously they also will cut the commission for the MFD community or the other distributors as well. So whenever they cut our commission, we are also able to pass it on the commission in the almost the sharing ratio to our distribution. So we don't see that might impact our net margin in a big way.
Right, sir. Right.
So does that answer your question?
Yes, just on the insurance question as well.
Insurance, what do you look at in the month of January overall?
For insurance business, I think still now, so I'll answer two ways. One is the health and life. As I said that health insurance, we are very, very bullish, very, very aggressive, and definitely I think last few quarters we have improved our health insurance business. And that we believe it is more sustainable and long-term in the revenue. Health insurance, probably January we have done the highest ever number with a huge margin. So that is a very, very strong message we would like to give. Life insurance side, yes, we might not be able to see the numbers what we did in 2023. But compared to the last quarter, definitely we have done the better number till now in the month of January. And we are hoping to continue the similar kind of number in the month, 2-3 months.
Sure. Actually, just two data keeping questions. So, like, one was just a confirmation, like, in the MF commission payout ratio, that has increased to about 54.6%. Is that right? In this quarter, for example?
So, Lalit, I think the payout ratio which I just gave you, there is some additional provisioning of about 3.5 crore in the current quarter because of additional trail linked to net sales, which we announced at the end of last quarter, and that's the reason there is additional provisioning of 3 crore. So, if you adjust that, so I think there is an additional cost of 6 crore in these 2 quarters, this and next quarter. If you rationalize 2 year, full year, I think the impact would be about 1 basis point.
Oh, okay. Sure, sir. Yeah.
Mr. Lalit, do you have any more questions?
No, thanks.
Thank you. Thank you, sir. The next question comes from the line of Dipanjan Ghosh with Citi. Please go ahead.
Hi, sir. Good morning. Just a few questions. First, on the mutual fund business, if you can, kind of give a qualitative understanding of how does the commission, yields really get restructured. For example, let's say when the AUMs have declined at such a sharp pace, I would assume that the absolute quantum that you would be getting from your asset management partners would also go down. So in terms of the commission yields, are they on a daily basis of AUM? So how does it really work? Both from what you get from the asset managers and what you pay out to your underlying agents on an absolute basis. How is it kind of how does the construct really behave? Second, you mentioned that your December to yesterday AUMs are down 6%, 6.1%. But if I look at Nifty mid-cap, small-cap, mid-cap is down like 9%, small-cap more than 10%. So just wanted to get some sense of, is it the underlying scheme mix or asset manager mix, or what is really driving this relatively better AUM movement compared to what we are seeing in the broader markets? Lastly, on the MF yield part, while you have already answered, one of the asset management companies seem to be suggesting that on incremental flows, they are moving to more of a mirror pricing or rather linear pricing of the expense ratio with the distributor commission payout. Do you see that more of a structural trend, or is that specific to one or two asset management companies? So these are the questions on the mutual fund side. I have one or two questions on the insurance also.
Suresh, you want to address?
I will address the last point first.
Yes.
AMCs are adjusting their payouts based on the latest TER. I think last few years, AMCs are repricing the new business every month. So every month we are getting the commission based on the latest DTR or the latest marginal TR of the AMCs. So I don't see that any changes in the AMC's business in the new pricing. The only new thing which is happening in last few quarters is the repricing the older assets. That has been done by few AMCs, and mainly I think those schemes wherein the AUM has grown very, very significantly, and that is where few AMCs have done it. We don't see that all the AMCs will follow to cut the historical AUM, but on the new business, all AMCs are doing, and they are doing for last many years. It is already inbuilt in the daily routine daily pricing, so we don't see any impact on that. Second point, you said that the average AUM. So if you look at last quarter's average AUM was around 1,02,000 crores, and today, this month, our average AUM till now is around 1,02,000 around. As on right now, our average, our AUM is 1,01,000 around. So as of now, our average AUM in the month of January is almost similar to the average AUM of last quarter. So as of now, we don't see any big change in the commission. Your third question was the total. I think I could not understood your first question, but it was, I believe, the absolute commission what we should be or will be getting from the AMC, and the absolute commission what we'll be passing on to the distributors. Is that the question? I think I couldn't understand the first question. Dipanjan?
No, he wanted to understand how you get. So it's basically based on the daily average AUM. That is what he was asking.
Yeah, so it's an industry norm that the commission is based on the daily average AUM into the percentage what AMCs have negotiated with us. Same is the rule for what we distribute.
And depends on your question regarding our ability to do better than the industry, than the Nifty 500 is, you are very, very true, because if you look at, we said our commentary also last quarter, our AUM due to mark to market has fallen by 4.5%, while Nifty 500 fallen by 7.7%. Similar is the case in the current quarter also. Overall broader market and the small cap, mid cap has fallen at a pace better more than what we have fallen. So if you look at, if you add the net sales roughly about 900 crore, then our fall is definitely better. We are able to control the losses of the investor because we have a reasonably about 18-20% in the multi-asset allocations and the hybrid category. And the exposure is definitely, I think we have the versatile book which is having an exposure to various category, and that's the reason. And my belief is that even the fund management industry is also doing better in this fall, recent fall.
Thank you, sir. Mr. Dipanjan, you can go ahead with the next question.
Sorry, I got dropped off. But yeah, sorry, I have one or two questions on the insurance side. In the last participant question, you mentioned that, retail plus life is doing well, but on the life side, the volume should be lower than 23. Did I understand correctly? Is it 23 or 24? I mean, last year or the year prior to that? When I look at the life new business, let's say this year, Jan 25 or so, let's say Jan 24, how that is shaping up. Second, in terms of now, let's say, competition from some of the other POSP players, now incrementally you are also doing ULIPs. I would assume that some of them are also selling ULIPs and other products. So do you see a possibility that over a period of time, some of the POSP partners can make a shift? The second question and last question is on the expense growth. When you mentioned that your expense growth will be like 12% around for the next year. That only includes core employee expense, other expense, depreciation and finance costs, right?
So let me address the third question first. I was just giving you a general expectation that in the current year, the employee cost and the operation cost is a bit elevated because we have added a lot of branches in the current year. So if I consider that next year growth is not going to be as significant as what we did in the current year, then the operating cost of rent and others would remain more or less in the range of 8 to 10%. And employees, we still continue to believe that the cost of salary rise would be little bit higher than an average. So I'm assuming that would be in the range of 12 to 14%. All in all, you can expect that 12 to 14% growth should come on the operating expenditure. I think the depreciation would be rock steady because we do not have any significant addition which will bring more cost on the depreciation side. I think finance cost is practically zero. So ये दो item में कोई change नहीं आएगा. Overall, we expect that the next year growth, looking at the current year का base बनाओगे आप तो 12 to 14% should be the range for operating expenditure, which includes the employee cost also. Sirish, now you can address the insurance and the ULIP.
The point what you asked that LIB, it was 2023 when this rule of 5 lakh rupees taxability has come in. So 2022-23 was the best year for the life insurance business. So that is where I said that this quarter we will not be able to break what we did in 23. We are not talking about 24, but 23 was an exceptional year in the life insurance business. So that was the point. Coming to the other POSP, yes, I think the insurance business side, I think there are many other companies focusing on the POSP business. But we always have focused on the POSPs from the cross-selling perspective, because we already have more than 35,000 distributors, ARN holders working in mutual funds with us. We normally are not in the competition in the open market for the POSP business. We always believe that all the mutual fund distributors or the ARN holders who are doing insurance business either somewhere outside with the manufacturer or the insurance companies directly, or those who are not doing the insurance business, I think we normally try to cater to that segment of distribution. So there is no overlap with the other companies focusing aggressively on the POSP market from the open market. They are in existence for last 4-5 years in the similar business. So they are doing their own business, we are doing our own business. So there is no big overlap between the POSPs.
So just one small follow-up. I mean, when I look at 4Q23 insurance numbers, obviously, across the industry, it was obnoxiously high, which, I think many of the companies might not be able to, or distributors might not be able to repeat in this year also. But if you exclude the one-off sales that would have happened in 4Q23, if I just look at 4Q24 as a relatively normalized base, on that, do you see a positive traction? I mean, because I think the industry might still end up with a positive YOY in 4Q. So would you be in line with the industry, or do you see the challenges of last quarter still persisting?
We might be in line with the industry, but obviously the impact of surrender value is visible in this quarter in the industry's number as well, and probably our numbers as well. So probably our number also would be in line with the industry's number. We are not saying that we should be able to do the FY'23 number. But yes, it would be better than what we did in the previous quarter, or I think, or the average number of during the year in the life insurance side. Health insurance side, definitely our numbers will be far better than what we used to do in any years.
Got it. Thank you, sir, and all the best.
Thank you. A reminder to all participants, ladies and gentlemen, you may press star and 1 to ask a question. The next question comes from Nikhil Suresh from Kotak Securities. Please go ahead.
Yeah, hi sir. Can you give some color in what is the mix between NFO and non-NFO flows for this year in the first quarter? And my second question would be, is there any update on the back book revision of commissions in terms of is there any effect on swinging flows towards other AMCs incrementally looking at the market dynamics? Thank you. That's all.
Sorry, I could not understand the first point, if you can take it.
The first question he was asking about the percentage of sales of NFO in our net sales. So I think that number we normally used to talk to them. So second quarter it was roughly about 30%. First quarter it was roughly about 21%. Last quarter series it came down to 14%. So last quarter बहुत ज़्यादा NFO थे नहीं, and on the total net sales, I think the contribution of NFO came down to 14%. That was the first question. Second, series you can address.
I think if you can take the second question also.
Second क्या था? I didn't understand second. Nikhil, can you ask the second question again?
Repeat your question, please.
Yeah, is there any effect on swinging flows towards other AMCs incrementally because of the back book revisions of commissions?
Sorry. You are saying.
Sorry.
मैं समझ नहीं पा रहा हूँ आपके क्वेश्चन को. Nico आ रहा है.
To use your headset, please.
Yeah, sure. Yeah, is there any, your update on from your perception, an update on what is the impact of, is there any impact of swinging flows towards other AMCs incrementally based on the back book revision of commissions by HDFC and Nippon?
So,
Is there any impact?
distribution level, lately we have seen some movement, but not significant. Some movement happening to the flows from the bigger AMCs to mid-size AMCs, but that is not going to impact the overall yield in a big way. Incrementally, yes, few percentage flows might go to the mid-size AMC, which can help us distribution improving little yield, but it is not going to impact the gross yield or the book level, so not impacting much.
Okay. Thank you. Thank you.
Thank you. Sir, does that answer your question? Mr. Nikhil?
Yes, sir. Yes.
Do you have any
Yes.
other
Yes.
questions?
Thank you.
Okay.
No.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you. Thank you. I think we could be able to answer all the queries of all the participants. At this time, our investor relationship guy, Parth, is not a part of this call. However, if you have any query, you can definitely come back to us or Shirish or anybody who is a part of this call. And even the Parth Parekh, who handles IR, is always going to be, he'll be available to address all your incremental queries. Thank you. Thank you.
Thank you.
Thank you so much.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.